Welcome to our comprehensive EUR GBP analysis covering October 6th through 11th, 2025. In this presentation, we'll examine the technical setup, fundamental drivers, and trading opportunities for the euro-pound cross. The pair continues to consolidate within a symmetric triangle pattern with a potential breakout approaching. We'll analyze key support and resistance levels, explore both bullish and bearish scenarios, and provide actionable trading strategies for short-term and medium-term timeframes. This analysis is prepared on October 13th, 2025 by FXTech, bringing you professional forex market insights. Let's dive into the technical picture. Euro to British pound closed at 0.87134 on October 11th, showing a modest decline of 0.07%. The daily time frame presents a neutral rating with a slight bullish bias. Moving averages paint a mixed picture. 10 out of 12 moving averages signal buy, while 2 suggest sell. Oscillators are predominantly neutral, with 8 neutral readings, 2 buy signals, and 1 sell signal. The RSI stands at 54.32, indicating neither overbought nor oversold conditions. This technical setup suggests the pair is consolidating, awaiting a catalyst for the next directional move. A critical technical development is the Symmetric Triangle Pattern that has been forming since early September. This pattern is characterized by converging trend lines, with lower highs and higher lows creating a narrowing price range. The upper resistance trend line sits around 0.8750, while the lower support trend line is near 0.8600. The apex of this triangle points toward mid-October, suggesting an imminent breakout. Historically, symmetric triangles can break in either direction, but the current fundamental backdrop slightly favors an upside break. Volume typically contracts during triangle formation and expands on breakout, which we're monitoring closely. Fundamental analysis reveals several key drivers. The Bank of England maintained its bank rate at 4% in September, but 2 MPC members voted for a 25 basis point cut, signaling growing dovish sentiment. UK labor market data showed weakness, with unemployment rising and wage growth moderating. Meanwhile, the European Central Bank maintains a more hawkish stance, keeping rates restrictive to combat inflation. This policy divergence creates a favorable environment for euro strength. Additionally, UK economic growth concerns and ongoing Brexit-related uncertainties continue to weigh on sterling, supporting the bullish case for EUR/GBP. Let's identify the critical price levels. Immediate resistance stands at 0.8730 to 0.8750, representing the upper boundary of the triangle and a key breakout level. A decisive close above 0.8750 would target 0.8800 with extended targets at 0.8867. On the downside, immediate support is at 0.8650 to 0.8670, marking the lower triangle boundary. A break below 0.8650 would open the door to 0.8600, with further support at 0.8550. The current price of 0.87134 sits right in the middle of this range, reflecting the market's indecision. These levels will be crucial for trade entry and risk management. For short-term traders focusing on the next 1 to 2 weeks, we recommend a range trading approach. Buy opportunities emerge near 0.8620 to 0.8650 support, targeting 0.8720 to 0.8750 resistance, with stops below 0.8600. Conversely, sell opportunities appear near 0.8730 to 0.8750 resistance, targeting 0.8650 to 0.8670 support, with stops above 0.8770. Use tight stop losses of 30 to 40 pips given the compressed range. However, be prepared for a potential breakout. If price breaks above 0.8750 with strong volume, consider switching to a long bias targeting 0.8800. Similarly, a break below 0.8650 warrants a bearish stance targeting 0.8600. Looking at the medium-term horizon of 1 to 3 months, we assign a 60% probability to the bullish scenario and 40% to the bearish scenario. The bullish case rests on a break above 0.8750, confirming an uptrend, Bank of England dovish tilt versus ECB hawkish hold, persistent UK labour market weakness, and widening policy divergence favouring the euro. Price targets for this scenario are 0.8800 to 0.8867 within 4 to 8 weeks. The bearish alternative requires a break below 0.8650, driven by Eurozone economic deterioration, unexpected UK resilience, or ECB dovish pivot. Bearish targets would be 0.8550 to 0.8600. No trading strategy is complete without risk analysis. Upside risks supporting EUR strength include further UK economic weakness, earlier or deeper BOE rate cuts than priced in, ECB hawkish surprises, UK political uncertainty, and stronger Eurozone recovery. Downside risks favoring GBP strength include significant Eurozone deterioration, UK economic resilience, ECB dovish pivot, risk-off sentiment favoring GBP as a safe haven, and rising energy costs disproportionately impacting the Eurozone. Risk management principles are paramount. Limit position size to maximum 2% risk per trade. Always use stop-loss orders. Maintain minimum 1 to 2 risk-reward ratio, and avoid over-concentration in euro to pound. To conclude, EUR GBP maintains a neutral rating with a bullish bias of 60% for the medium term. The Symmetric Triangle Pattern suggests an imminent breakout, with policy divergence favoring EUR strength. For short-term traders, range trade between 0.8600 and 0.8750, buying dips near support and selling rallies near resistance, while watching for breakout confirmation. For medium-term positions, adopt a cautiously bullish stance, targeting 0.8800 to 0.8867 on a break above 0.8750. Monitor BOE and ECB policy meetings closely. Watch UK labour market data, and reassess if price breaks below 0.8650. Critical levels to watch: resistance at 0.8750, current price at 0.87134, and support at 0.8650. Thank you for watching this FXTech analysis.